Hello and welcome back to another episode. In this episode, we want to reinforce the market structure shift concept. If you remember in our previous video about market structure shift, we talk about how to confirm your entry zone before you pull the trigger. This is very important because most of the time you find price coming to an entry zone that you thought was a very high probability entry zone, and then it blows through it. So how do you deal with this kind of situation? Now, that is why we came up with this market structure shift theory or concept, whereby you need to confirm your entry zone. This time is your entry zone. You want to confirm that entry zone will be the last barrier for price. All right, that price will not go either above it or below it, depending on the direction of the market. And the only way you can do that is to use the concept of market structure shift on your higher time frame. We discussed that extensively the other time. Now, in this very example, this is the trade I just took this morning. I just came out on 5RR. I didn't want to hold it for too long. Now, take a look at this. We are pretty much bullish, as you can see. This is Euro USD and this is 15M. And now, look at it. Price. Let me zoom in. Please pay attention now. This is very important, very crucial. Now, look at this. The last high is this one here. And why is that the last high? It's the last high because price has taken out inducement. Here is your inducement in the market, guys. So inducement is taken, high is confirmed. And then your low cannot be confirmed. This low cannot be confirmed until price travels back up to take out this major structure high and close above it. And that happened. So this is your low. Let me take out price from here so it can become very clear to us. Maybe here. All right? So that you can understand what we are doing. Now, this is your low in the market. And this low now serves as your change of character. Because if price comes down to take out this low, that means that this is a change of character. So price now went up and printed this high. For this high to be confirmed, it needs inducement. Here is your inducement. Simple. So this is our high. Okay? If price goes to take it out, that will become a break of structure. And this is our low. If price comes down to take it up and closes below it, this becomes our change of character. Simple. So now, let's press forward price. Okay. So as you can see, price came to take out this low. With a candle wick, it didn't close below. Will you call this one a change of character? No. This is liquidity sweep. Now, once you find this, I've told you several times, once price takes out a major structure high or low, with a candle wick, it tells you, it's a signal that price wants to make a deeper pullback. And you want to take advantage of this wick here. Okay? And so how do you take advantage? This is the way for you to take advantage. You begin to look at, as price is going back higher, all right, doing something like this. Taking out inducement, then you go long. Taking out inducement, all right, you go long. And all of that, that's how you take advantage. Simple. But you need to wait for confirmation. Okay, so now, look at this low. This is one straight leg. Price has not taken out anything yet. So let's continue. And so price now pulled back. As you can see, it pulled back. So this is a high. But this high didn't take out any inducement. So this cannot be a valid high. This is internal structure high now. All right, so let's continue. So can you see what is happening there? I want you to understand what is happening. All right? This is, it didn't take out inducement. This is not inducement because this candle's high and low protected. Price just simply came down. just printed this low and came and pulled back. Simple. So we continue to play price. Okay, let's see what is happening here. Now, price printed this new high. For this new high to be confirmed, it needs inducement. Inducement was not taken. But let us look at this high. As price taking it out, price has taken it out slightly with this candle. And this becomes a new high if it takes out inducement. And where is the inducement here? This is your inducement. So if price takes it out, then that high is confirmed. As you can see, it took it out. So this high is confirmed. Remember, this is internal structure high. All these are internal structures. So we continue. Okay. This high is confirmed as a valid high. Now, for this higher low to be confirmed as a valid higher low, it has to take out this major structure high and close above it. But as you can see, it didn't close above it. It didn't. It wicked above it, and this next candle also wicked above it. This is liquidity sweep. This is not a break of structure. It's liquidity sweep. So if price comes down to take out this low and closes below this low, it's a clear signal that price wants to go down, at least momentarily. Okay, so let's advance price and see. So can you see now? Price took out this low here. So when it took out that low, this is a clear sign. After grabbing liquidity here, look at the momentum of this candle, these two candles. Look at it. Think about it, guys. The volume is much here, telling you that price wants to go down. The smart money wants to drive price down. Okay? After grabbing liquidity here, they ran away to come and break the structure low here. So once that happens, what do you want to do? You want to mark out your order flow. And where is your order flow here? Why do you want to mark out your order flow direct without any inducement? I'm going to tell you that. So this is your order flow on the 15 minutes. The reason why we are marking this order flow direct without waiting for any inducement is that liquidity has already been grabbed here. So since liquidity has already been grabbed here, that's why they are running away. That's why they put a lot of money in the market. They invested so much to push price aggressively downward. Can you see that? So this becomes our high probability area of interest. So if price returns to tap into this area, we want to go short. Now, but we cannot just enter directly like that because this is too large a zone. So what do? We can now go to the 1M to refine that very zone. Simple. So this is our 1 minute time frame. We want to refine this zone. So how do we refine it? Well, the first refinement is this one here. This is still fresh zone. Okay. Now, if you are thinking that this has come back to it, no, it didn't touch it. Look at it. Let me show that to you. Look at it. It didn't touch it. There is a slight gap there. So that becomes our refinement. That's number one. That's number one refinement. But let's look for another refinement. So this is another area of interest because it didn't tap on this. Okay? This area of interest is still fresh. So we can mark that one out. I want to change that color so that it doesn't... but even then, there is no point changing it. So these are the two areas of interest that we want to look to take this trade from. Okay? These two areas of interest. So you can, when you are taking your trade in either of these zones, you can just place your sell limit order here and your stop loss just above this one. Because the two, they are too close. They are very, very close. So treat them as one zone. That's how to trade. Treat them as one zone. Even though they are separate zones, but treat them as one zone. Put your pending order to sell here and your stop loss just above. Simple. Okay? And so we want to continue to play price and see what happens next. Once price taps into this zone, either this one or this one, once price taps into it, go to your higher time frame, which is your 15M, to confirm that there is a market structure shift. Even if it gives you TNCP here, please So let's continue. Okay, so look at what has happened here. Price has tapped into it. Look at it. Price has tapped into it now. And it has given us TNCP. Now, if you mark here to go short, because it has given us TNCP, you need to be very careful. You need to be extra careful. That's why I'm telling you, confirm your zone with the higher time frame. So this becomes that area. Let me change this color again. Let me change it to red so it can stand out. Let me change it to red. Okay, so that's our zone that we want to take this trade from. If you just enter your market from here blindly, simply because it has given you TNCP, how about if this is not the last zone that price can travel to before going down? How about if it's still pushing higher? How do you know that? Because you just saw TNCP doesn't mean that price will go down from there. So let's get back to that 15M and really find out what's going on there. Okay, so this is the 15M. Look at it. Is there any market structure shift there? There is none. There is no market structure shift there. So why would you want to take your trade on the 1M? Because you saw TNCP. This is a way to confirm your zones. What I'm teaching you here is not taught anywhere. This is the way for you to confirm your zone before you take your trade. So there is no market structure shift here. I've shown you two ways how to know that structure has shifted. All right? There is no market structure shift here. So let's continue to move price and see. Now, we have gone too far. Can you see what has happened here? Price entered into this one. And after then, it gives this market structure shift. Can you see what is happening? So now that it has given market structure shift within the zone that we refined on the 1M, this now becomes price is most likely not to go above this area, this point. This area is most likely price will not go above this high. Why? There is market structure shift here on the higher time frame. So if we go to the 1 minute time frame and find TNCP or anything here, then we can be sure that price will not go above this high. That this zone will be the barrier for price. Okay? So let's go back to the 1M. Now, look at it here. This is that our zone, this one. Let me change this color so that it will not confuse us, so that you can understand what I'm trying to do. Which one should I change to now? Let me change to this one. No, this one. Okay? So, now, this is our zone from this high to this low. That zone we just marked now on the 15M. Now, inside this zone now, do you find any TNCP? Yes. And where is it? Look at your TNCP here. Clear TNCP, this one. From this high to this low. I'm passionate to make it look very real for you to see what I'm saying. Let's play price slowly so we can understand what we are doing. Let me just take this thing maybe to play slowly. Okay, so can you see what is happening there? Now, price has tapped into this zone. This is the zone. From this high to this low is the zone, as you can see. And now we have TNCP here. This is our confirmed TNCP. Why? It took out the high of this candle and this one close below it. So anytime price comes into it, we want to take our trade directly from there. Simple. We want to take trade from there, downward. Because we are too sure that price will not go above this zone. At least there are multiple confirmations that show that this zone will hold price. Okay? So let's continue to play price and see. So price has tapped into that zone and it's now going down. Okay? That's how I got the trade this morning. Can you see that? Price is going down. It cannot go above the zone because we have already confirmed our zone on the higher time frame. You don't need to rush into the market. So that's how I got 1 to 5. And as you can see, price is dropping. Seriously. Okay? This is the way for you to to confirm your entry zone before you pull the trigger on the higher time frame. I hope this is clear enough. If you still have some questions, let me know. All right? I see you in our next class.